The majority of people would tell you that liabilities are easy. Liabilities are my credit card debt when I go out and I finance my Gucci, that's a liability. And then they would tell you that your assets are things like the home that I live in, my car, and the cash in my bank. Well, let's talk about that. The assumption that everybody makes here is if you have some equity in your home and your car, that is why it's an asset because, well, that's money sitting in this thing, this asset. So now let's assume that you have a fully paid off home and a fully paid off car. Now you lose your job. Either you get fired or the business you're working in or own goes bankrupt and you no longer have an income coming in. Now what? Well, you have a home and a car, which you think are assets that have equity in them. However, they require payments because your home has property taxes. Your home has property insurance payments. Your home needs maintenance. Your home needs utilities that need to be paid. All these things are money coming out of your pocket. And if you don't have money coming in, you're not going to be able to afford it. Just like your car. You thought it was an asset, but you need to pay for gas. You got to pay for the insurance. You got to pay for the maintenance. So now, if you want to actually get any cash out of this, you have to sell this quote-unquote asset. That way you can have some cash in your hand. But if you sell your home, you no longer have it. That means in order to maintain this asset, you have to keep paying to maintain this asset. And then, if you have to sell this home or this car, you have to hope that you can sell it for more than what you bought it for to actually make any money, because the whole purpose of an asset is to make money, right? Well, if you sell your home and home values are down, or you're in a neighborhood where home prices have fallen, well, now you might not be able to get what you bought it for. You might end up losing money on this home, on this thing that you thought was an asset. Same with your car. Cars drop in value. That is a fact. The moment you drive that car off of the lot, it is going to lose 15 to 20% of its value immediately. Cars are depreciating liabilities. So now, yeah, you might be able to get some cash out of this thing, but there's a chance you're going to lose money. Same with your home. We've seen home markets go up and we've seen home markets go down. During the 2008 real estate crash time, we saw home prices around the country fall. And so you have markets where real estate prices are going up and you have markets where real estate prices are going down. And if you have to sell your home during a time where real estate markets are down, well, now you might be forced to sell this quote-unquote asset at a loss. And in order to maintain these assets, you have to keep putting money out of your pocket into this asset to keep it going forward. And now, if you really want to make money on this property, not only do you have to factor in all the expenses that you put into the property taxes, the insurance, the maintenance, the utilities, but also all the upgrades you put into this property in order to make it livable for you. But what about the cash that's sitting in your bank account? Now, if we go with the same example, you lose your job, the nice thing is you can fall back on this cash and you can use this cash to fund things. You can use this cash to make your housing payments. You can use this cash to keep paying for your gas. You can use this cash to keep paying for your food. But there still is a problem with that cash. Now, let's go back to what do you expect with an asset? You would expect an asset to make you money. Right, that's what we hope an asset will do. I'll get to the actual definition of an asset in just a minute, but you would hope that an asset is something that's going to make you money. Well, let's just take a look at the history of money. Let's assume now that we go back in time about 50 years and you were able to put aside $1 million in the year 1973, and that cash just sat there in the bank. Now, if you lost your job, it'll be no big deal because you have $1 million in the bank that you put aside in 1973. But the problem with that is that in 1973, that $1 million could buy you a lot more stuff. In fact, if you want to be able to buy the same amount of stuff that $1 million could back in 1973, you would need almost $7 million today. You need about $6.9 million today to buy what $1 million could back in 1973. So that means, yes, this cash still has buying power. This cash can still pay for your food. This cash can still pay for your housing. This cash can still pay for your car. However, the value and buying power of your cash is dropping because of inflation. So now, yeah, your cash can still buy you things, but the value of your cash is falling. And this is where now it becomes very important for you as a financially educated person to really understand the difference between an asset and a liability and understand how you can accumulate more real assets that will pay you with real money. That way you can continue growing your wealth, because the average person is working for assets like this. They're working to save up more cash, they're working to drive a nice car, and they're working to have a big home to live in. Nothing wrong with having a nice home. Nothing wrong with having a nice car. And you need cash. I mean, you need cash to buy real assets. You need cash to have an emergency saving. But I want you to understand that these things are actually losing in your financial wealth. If you want to become wealthy, what wealthy people do is they're trying to own real assets that will pay for these things, and they use this to buy real assets. So let's talk about that. The best definition of a real asset that I can give you is that a real asset is something that will continue to pay you even when you stop working. And I gotta credit Robert Kiyosaki for coming up with the definition of this, but a real asset is something that will continue to pay you even when you stop working. That's why the home that you live in is not a real asset, because if you stop working, you still have to keep paying out of your pocket to pay for that home. If you stop working, you still have to pay out of your pocket to drive that car. So your home and your car are not real assets because you have to keep paying out of your pocket to keep supporting these so-called assets. Your cash, on the other hand, doesn't keep paying you. Your cash is not growing. We just saw that over the last 50 years that the value of your cash is dropping because the value of each individual dollar is going down. So if you want to own real assets, things that will continue to pay you even if you stop working, that means you have to reframe your mind when it comes to real assets, and you need to use the cash that you're working to earn to buy these real assets. So what are these real assets? Well, it could be things like real estate, stocks, and businesses. Real estate, stocks, and businesses are the three most time-tested and proven assets that have built more wealth for people than really any other asset class. So let's talk about this. Now, I do want to let you know that if you are looking for additional resources to grow your financial education journey and growing your investing education, we have a free ebook called How to Build Wealth as an Investor that you can read for free that my team at Briefs Media wrote. This ebook will walk you through things like how do you build the mindset of a successful investor, to how do you save your first couple $1,000s, to how do you start investing, what are different types of investments, how do you generate cash flow, how do you invest your money into different investing strategies. And then we go into things like, well, how do you spend your money smartly? To how do you earn your money smartly? To how do you protect your assets? There's a ton of value in this ebook. You can download this ebook for free. So if you want to read this ebook, I got the link for you down in the description below, or you can go to briefs.co/ebook. My first real exposure to investing into real assets was when I started investing in real estate. Now, I was fortunate. I started investing in real estate in 2011, which was at the bottom of the 2008 real estate cycle, which meant real estate prices were selling for dirt cheap. I didn't know they were selling for dirt cheap. They just were, because I had no experience when it came to investing. I had no experience when it came to financial education. I didn't even know that you could invest in real estate until I started doing it myself, because I didn't know anybody investing in real estate. But the way that it works when you invest in real estate is you're going out and you're going to buy a property. Let's say a single family home. And now when you go out and buy this home, you're not buying this home to live in yourself. You are buying this home to rent out to somebody else. You're buying this home for the purposes of generating cash flow, because now the goal is you buy this home, somebody else is going to live there, and then they're going to pay you rent every single month. And if you do this correctly, the rent that you're going to generate from this property should not only pay for your property taxes, your insurance, your maintenance, your management fees, and your vacancy costs, but it should also put some money in your pocket every single month. So now you own this property not to live in yourself, but to have somebody else live there. And now this tenant is paying for your expenses. They should also be paying for your mortgage if you have a mortgage on this property, and putting some money in your pocket every single month. That means now that this asset is paying you for owning it, as opposed to the home that you live in, which you have to pay to own. Can you sell your home for a profit? Sure, but that's not guaranteed. Here, if you do it correctly, this home should be paying you every single month. When it comes to stocks, the way it works here is you have a number of companies in the world and the United States that when they go to a certain point, they're going to want to either A, get more publicity, or B, get some more money, or I guess liquidate their assets as well, because now they can trade the shares of their company on the public markets. And so when a company gets big enough, they will consider doing what's called an IPO, an initial public offering. And what that means is that this company is now going to trade on the stock market. So now what you can do is, instead of just going out and buying stuff on Amazon, instead of just going out and buying Apple products, instead of just going out and spending time on Google, you can own a piece of these companies. Now, I'm not recommending any of these companies, but what I'm saying is now you can shift your mindset from just being a consumer to being a producer. And what that means is now you own a piece of the companies where you are already spending your money or your time. And a simple way that you can do this, a simple way for you to start, is if you're going to go out and spend $1 at a company, spend a dime buying the company. If you're going to go to Chipotle and spend $1, spend 10 cents buying a piece of the company. If you're going to spend 10 bucks at wherever, Lululemon, I don't know if you can buy anything for 10 bucks at Lululemon, spend $1 buying the company. Now, does this mean the company that you're buying is a great company? No, absolutely not. In fact, you will probably lose money at some point because investing has risks, and you should always do your own due diligence and never blindly trust a random guy on YouTube. But the whole idea here is now you are starting to think like an investor. And the whole idea of thinking like an investor is, instead of me going out and spending all my money and buying fake assets, I'm going to use my money to buy real assets. I'm going to use my money to own a piece of equity. I'm going to use my money to own a piece of the economy. But that means you have to start thinking a little bit different. And as soon as you start investing your money, you're going to start changing the way you think, because now you have your skin in the game. You have your own money in the game. And you don't want to see yourself lose money. Unfortunately, losing money is a part of the process. But when you invest your own money, that's when you're going to start getting more serious about paying attention to where it is that you're investing. Now you might say, but Jaspreet, I am not interested in researching companies. I'm not interested in studying financials. I'm not interested in reading profit and loss statements. I'm not interested in studying balance sheets. I'm not interested in studying cash flow statements. I don't want to do any of that. Well, you don't have to, because in the stock market, there are things called funds. Now there's a few different types of funds. I don't want to get too technical in this video, but you have things like ETFs, index funds, and mutual funds. And all that means is that these funds will allow you to buy a piece of a lot of companies by just buying a piece of that fund. So now, for example, there are funds that will give you exposure to the S&P 500. The S&P 500 is a group of the 500 largest companies in the stock market. Now, instead of you going out and trying to find the best companies, you could just invest in the largest 500 companies in the stock market. There are funds that will give you exposure to the entire stock market. We've seen the stock market grow over the last century. But many times people will go out and try to invest in the best company and see that company go bankrupt or see that company go down and wonder why they keep losing their money. Well, if you don't know how to invest, if you don't know how to research, if you don't want to do that work, you can just invest in funds that will give you exposure to the total stock market. There are funds that will give you exposure to technology companies. There are funds that will give you exposure to AI companies. There are funds that will give you exposure to healthcare companies. There are funds that will give you exposure to international companies. There are funds that will give you exposure to dividend-paying companies. I mean, you have funds for everything. And so now, instead of you trying to go out and find the perfect company, one other thing that you could also consider doing, if it's right for you, is even potentially invest in funds that where you just own a piece of the economy without having to do all the work. Because the reality is, if you want to succeed as an investor, you got to be willing to put in some work to actually research what it is that you're putting your money into. Otherwise, it's almost like gambling. Option number 3 is business. Now, this can be your own business or buying somebody else's business. If you're going to buy somebody else's business, it's going to take the most time and the most money. If you're going to build your own business, well, that takes the most time. And then as you start to grow the business, you're going to want to reinvest your own business's money back into the business. Now, this one is the most difficult and has the highest barrier to entry. I mean, you can start investing in stocks with as little as $100 or $10, even $1 for some apps now. Investing in real estate takes more money than investing in stocks. You would need at least somewhere between $30,000 to $50,000 to get started as a real estate investor. I mean, could you start investing with less? I'm sure you could. But if you want to be able to start comfortably, I would say you need at least $30,000 to $50,000 to start investing in real estate. To go out and build a business, you don't need a ton of money to start. But you're going to need time, and you're going to have to be willing to take risks, and you're going to have to be willing to dedicate yourself to building a business. I can tell you from experience building Briefs Media that building a business, unlike what a lot of people say on the internet, it's not something that you can do just here and there if you want to see real success with that business. I mean, sure, if you want to just build a side hustle, you could do that. But if you really want to build a real multi-million-dollar business, if you want to build a real sustainable business, it takes time, it takes hard work, it takes risk. Now, does that mean it's impossible? No, absolutely not. Anybody can actually do it. But it takes a lot of effort, which most people are not willing to put in. And that means you got to be willing to learn. So now the whole idea here is you're going to produce an income production machine. You're going to create this income production machine. Here in real estate, you're buying this income producing machine. Here with stocks, you're buying the income producing machine, right? The income producing machine here is that home that you're buying. That home is going to produce income. You just got to get somebody to live there and pay you rent. And you can have a property management company help you with that. With stocks, you're buying a piece of the income producing machines that already exist. Here, you're creating the income producing machine, or you're going to have to buy out one of these income producing machines. Now, I recommend entrepreneurship to anybody who's willing to put in the work, to anybody who wants to do that, but anybody who doesn't want to be an entrepreneur, anybody who doesn't want to put in the effort, anybody who doesn't want to put in the hard work, anybody who wants an easy lifestyle, I do not recommend entrepreneurship for you. So this one is really, up to you. There's nothing wrong with being an employee. There's nothing wrong with being an entrepreneur. I love entrepreneurship just because that's the way that my brain works. But if that's not how your brain works, then don't go down this route. However, this has been one of the most time-tested and proven ways for people to build wealth. But if you can't do this, then you can do this and this as a way now for you to invest in other income-producing machines. But the key is now, if you want to build wealth, you have to stop just buying the fake assets and start buying real assets. Because if you were ever to stop making money, if you were to ever stop working, would your fake assets continue to pay you, or would your real assets continue to pay you? Entrepreneurs, if you are serious about building your business, then you need to be taking the money that you're making from your business and investing it back into your business, as opposed to taking that money and investing it in stocks and real estate, because none of those things are going to help build your business. But then the question is, when do you diversify? And when do you start taking some of this money and enjoying it